Is Eugene Lear, and I work for Pay Plan Solutions as a debt counsellor. I've really sat down in the office today to try and give you an idea of what to do when you're over indebted, when you find it hard to settle your accounts at the end of each month, and when you're perhaps looking at different solutions in order to make your life a little easier. I've put together a very basic presentation just to give you an idea of what we've done for a client in the past. And perhaps I can start by saying, well, who comes to us and why do they actually come and see someone like ourselves? Our clients typically have between 10 and 12 times their gross salary in unsecured debt, and they're paying more than half their salary to debt currently. So it's making it very tough for them after tax and after they've paid their expenses like food and school fees and transport, etc. It makes it very, very difficult for them to survive or even put aside any savings whatsoever. Typically, people who come to us have an assortment of debt ranging from shorter-term store cards and credit cards to longer-term personal loans that are paid back over a longer period, between 3 and 5 years usually. A lot of those loans typically show higher interest rates than store cards and credit cards, and I'm going to show you the net effect of exactly what that means to your pocket. I've tried to put together a realistic example for you, and I've outlined some of the basic things here of Linda, who's a single mother who came to see us. She had a little over 15,000 Rand per month in earnings, and even though it seems like a good salary for what she was doing, her debt commitments were weighing her down. This is typically what she was dealing with. She had a Woolworths store card on which she owed about 7,000 Rand. At this stage, her monthly payment was around 700 Rand. She had a Standard Bank credit card on which she owed just under 15,000 Rand, and her monthly installment there was about 1,300. Her FNB credit card was standing at 12. She was paying 1,100 Rand a month there. And then she had two longer term loans, a FNB personal loan, just over 3 years, which she owed about 40,000 Rand, her installment being 2,159, and she had an African Bank personal loan over a 5-year period, a longer period, on which she owed about 80,000 Rand, and that was her installment 3,464. So in summary, this is what she was dealing with. Her current debt commitments were about 8,723 Rand a month, and she was trying to settle a total amount of debt of 154,000 Rand. And you can quite quickly see that that's just over 10 times her gross monthly earnings at the moment. If you had to state it in another way, perhaps, if she didn't pay tax and she didn't have any expenses whatsoever, it would take her nearly a year to settle this debt. What's also quite frightening is she's therefore paying almost 60% of her salary to debt before taxes. I think it works out to about 58% of her gross salary. Before her taxes, her living expenses, and this is clearly a very, very difficult task for her. After tax and after paying all her creditors, she has about 5,000 Rand left for rent, transport, food, school fees, etc. All her other basic living expenses. So what was the answer in her situation? Well, until 2007, all the banks would probably have you believe that the answer is to consolidate your debt into one loan. The reason why I say 2007 is that's when we got our new National Credit Act, and it placed certain restrictions on credit providers. More recently, there's actually been more amendments to that act, literally enacted in August of 2014, and it stops credit providers from extending the types of loans in the types of situations they might have granted loans before. But let's have a look quickly at what a consolidation looks like, and I'd like to show you this as perhaps the fine print on on a contract that if you had to calculate it yourself, you might think twice about doing this. I've taken a very simple loan calculator, and let's say that in 2007 you went and sat in front of a bank consultant, and you said you have 154,000 rands worth of debt, and you wanted to consolidate that into one loan. You wanted to pay as little as possible on the loan each month, so you want to extend it over the maximum period. And typically what the bank would do for you is they give you a loan for the 154,000 rand. You can imagine it's a very high risk loan. They have no car or house that they can repossess should anything happen. So with high risk for the bank comes high interest rate. The maximum interest rate currently is around 32% on these types of loans. Maximum period you can extend a loan of this type to is around 60 months. So let's just have a look at and just keep in mind that currently Linda is paying around 8,723 rand a month to all her debt. So any relief from that might seem like a good step. And on this consolidation loan, we can actually see that she would probably end up paying slightly less. And let's have a look. The installment that she would be paying each month is on the right hand side here. Her installment would work out to about 6,600 rand, and that's taking into account things like credit life insurance, which is there to cover the bank in case she's retrenched or loses her job or is disabled, etc. What is quite frightening though is that her total payments, what she would pay back over the period of the loan, would be nearly 400,000 rand. Very, very big difference to the 154 she is borrowing initially. Also, what one needs to have a careful look at is the fact that of each and every payment made, I mean, let's have a look at her payment there and let's see what that does to her balance each and every month. Each month she'd be paying 6,600 rand, but the only amount that would actually be coming off the principal amount, so what her statement, what her balance would reflect the next month, is just over 1,000 rand, 1,066 rand going to the principal over there. So her balance would come down in the first payment from 154 to around 153,000, just a spot below. And that's after making a 6,600 rand payment. And this is exactly the kind of thing, I mean, obviously, as the loan progresses and you can see the months going by, yes, more and more comes goes towards the principal amount, but the balance comes down very, very slowly. I mean, let's have a close look at the balance reducing here. By month number 13, so 12 months after she started the loan, her loan has really come down by just more than 15,000 rand, as an example, and that's after paying way over 66,000 rand worth of payments. Let's go back to what is the answer, what is the logical step for her, and perhaps here I can show you exactly what something like debt counselling would do for her. Under debt review, we did the following for her. Like with a consolidation loan, we extended the period on her debt, but because we could show the banks that she was over indebted, paying so much to debt each month, she received concessions on the interest rate, which reduced the total she had to pay to her debt to around 4,700 rand per month. She now only has to worry about the one amount that she pays each month, and it leaves her with almost 9,000 rand per month to live on. Let's look at what she had before, around 5,000 rand. Now she'll have about 9,000 rand to live on. And now her budget seems to make a lot more sense. She's paying something a little closer to 30% of her salary to debt. Also, with debt review, unlike a consolidation loan, it's not a fixed contract. She can now pay in a little bit extra, and through a process called cascading, where the smaller accounts actually settle some of the larger ones as they get paid up, she will actually be out of debt a lot faster than what she would have with a normal consolidation loan. She is also intimated that with her first increase she'd like to put a little bit more in, and we've calculated that we could probably get her out of debt within 4 years. And the great thing about debt counselling, obviously, at this point, she will probably be more credit worthy than certainly she is right now, because one of the big things that will change for her in future is her affordability. I hope this has given you an indication of what can be done. If you'd like anyone to have a look at your specific situation, please log on to our website at www.payplansolutions.co.za, or give us a call on our number 0861 626 859, and we'll gladly do a free assessment for you to see how we could perhaps help you.